Geojit Spotlight. Starting with the impact of the COVID-induced crash that drove the Sensex under 30,000 points, followed by a strong rally exceeding 60,000 points, we uncover its impressive trajectory. A pressing query arises: can the Sensex eventually touch the significant 1 lakh milestone? Furthermore, in this video, Dr.V.K Vijayakumar explains the complex connections among GDP growth, corporate earnings, and ever-changing market landscape. Welcome, sir. Sir, COVID crash pushed the Sensex below 30,000 points. In the rally after that, Sensex regained 30,000 points and started moving higher to 40,000, 50,000, 60,000, now around 66,000. Will the Sensex reach the magic figure of 1 lakh? If yes, when?
Yes, it's an interesting question. Many investors ask me this question during seminars. Will the Sensex touch 1 lakh? If so, when will it touch 1 lakh? I will answer this question from my experience. From my experience as an investor, I have seen the Sensex cross several milestones. The Sensex crossed 1,000 in 1990. I still remember some investors gathering together here in Thrissur and celebrating Sensex touching 1,000. After that, it moved to 2,000, 5,000, 7,000 and touched the 5-digit figure of 10,000. That was in 2006. And from that 10,000, it moved to 20,000, 30,000, and now it is above 60,000, 66,000. That is where it is now. So I have not just watched this performance, I have experienced this market performance. I have been part of this journey of the Sensex from say around 300 when I started investing and to around 66,000 now. And I have benefited from this journey with the Sensex all these years. So from that experience, I don't have any doubt that the Sensex will certainly touch 1 lakh and go beyond that, go much beyond that. But when will it touch 1 lakh, in which year, in 1 month? Nobody can say. It can happen in 2027, it can happen earlier than that. That is very difficult to predict, almost impossible to predict. So investors should be trying to understand more what are the factors driving the market to higher and higher levels. There is a saying in the market that in the long run, the market is a slave of earnings. It is the earnings of companies which will drive the market. And earnings depends on GDP growth. So GDP growth of the economy, corporate earnings, and market, all these are correlated. So investors should understand the correlation between these three factors and what is the situation like as far as India is concerned when we talk about India's GDP growth, corporate earnings, and the market levels.
So please explain the correlation between GDP growth, corporate earnings, and the market movement.
Well, let me explain that. In the first 3 decades following independence, 1950s, 1960s and 1970s, India's GDP growth was very, very poor, only 3.5% GDP growth. And corporate earnings also were very, very low. Taxes were very high. There were lots of controls on companies. There was even dividend control. The government of India, finance ministry decided how much dividend companies should pay. So that was a different time, different era. And therefore, the economy did not well. Corporate earnings were very, very poor. And the market also performed very poorly. The returns from stock market investment during these 3 decades did not even beat inflation. Right? So that was investment returns were nothing to talk about. But then this scenario started changing in the 1980s. In 1980s, India's growth rate, GDP growth rate, moved up above 5%. It was 5.6% average in the 1980s, from 3.5% in the 3 decades before that. Then after 1991, when we initiated liberalization and reforms in India, the economy simply took off. So if you take the period from 1991-92 onwards till now, India is the second fastest growing large economy in the world, second only to China. So GDP growth picked up more than 6.5% if you take the last how many years, 32 years average, and corporate earnings also are very good. So the market is moving up. So market moves along with earnings growth. And a very important point is, if you have a 6.5% GDP growth and let us say 5.5% inflation, that means you have a nominal GDP growth of 12%. So when you have a nominal GDP growth of 12%, 15% corporate earnings are possible, because in GDP, there are three sectors: agriculture, industry, and services. Agriculture can grow maximum at 4%. If you take 5 years, 10 years, 20 years, 30 years, maximum 4%, not more than that. But industry can grow much higher. Services can grow at more than 10% continuously for many years. And most of the companies are in industry and the services. Therefore, the corporate earnings can be 15% when the nominal GDP growth is 12%. In 1979, Sensex was 100. Now Sensex is around 66,000. So during these, how many years? 44 years, the compound annual growth rate from investments in stocks has been around 15%. More than 15% if you take dividend yield also, right? So when you have 15% earnings growth, the market will double in less than 6 years, right? There is a very important formula called, it's a I would say a secret, not a secret, it is a very interesting formula to understand the effect of compounding. It's called the rule of 72. 72 principle or rule of 72. You divide the number 72 by, let us say, the interest rate. So if you divide 72 by the prevailing interest rate, then it will give you the number of years that will take to double your investment. For example, if the interest rate is 6%, 72 divided by 6 equals 12. That means your money will double in 12 years. If the interest rate is 8, 72 divided by 8 equals 9. Your investment will double in 9 years. If your return is 12%, right, from the market, let us say, we have got 15% during the last 44 years, but since Indian economy is at a much higher trajectory now, we can be conservative and expect, let us say, 12% returns. So if you are getting 12% earnings growth on an average, then 72 divided by 12 equals 6. So that means the Sensex will be doubling every 6 years. Right? Sensex will be doubling every 6 years. So in 2011, Sensex was around 16,000. By 2017, it touched around 33,000, more than doubled. From 33,000 in 2017, the next 7 years, now we are 2023, it's again doubled to 66,000. So it is quite possible that in the next 6 years, by 2029, Sensex can be 1,35,000. So you talked about the magic figure of 1 lakh. So 1 lakh will be achieved much earlier than that, perhaps by 2027 or even earlier. But a very important point that has to be understood is corporate earnings do not come in a linear fashion. I said 15% CAGR or 12% earnings growth expected in the coming years. That will not come in a linear fashion. In some years, the earnings growth will be very high. For example, in 21-22, earnings growth was 24%. Nifty earnings growth was 24%. In some years, it has been only very low, 5%, 6%. During certain periods, there will be fast growth. For example, during the period 2003 to 2008, earnings grew at a rate of 25%. CAGR, compound annual growth of 25%. That took the Sensex from 3,000 in 2003 to 20,000 in 2007. right? So it was driven by mainly earnings growth. But if you take the decade 2010 to 2020, earnings growth was only around 6%. It was a decade of low earnings growth because of many reasons. Therefore, the market growth also has been sluggish. So this will come in fits and starts, not in a linear fashion, but certainly you can expect a 12% average earnings growth for the next many years to come. So investors should be focused on the growth of the economy. They should be looking at the growth of the economy, corporate earnings, which sectors are doing well, which companies are doing well, and investing accordingly. An ideal strategy would be to invest in high quality stocks systematically, and also to invest through mutual funds in a systematic manner. One more important data, in the year 91-92, when we started economic reforms in India, the net profit of India's corporate sector was 7,400 crores of rupees. 7,400 crores was the net profit of all the companies in India put together. Now, in India, we have 7 companies making profit of more than 10,000 crores in one quarter, right? So there are many companies which are making profits of more than 10,000 crores, many companies which are making profits of 5,000 crores. These companies will be driving this share prices and index to higher and higher levels. Investors should be part of this journey. They should not be looking at the day-to-day gyrations. From 100 in 1979 to 66,000 now, it has been a great growth, but in between we had several crashes caused by a large number of internal and external factors. Don't bother about that. Invest systematically, participate in this journey, and grow rich.
Thank you, sir.